Welcome back to the Insurance Guru. My name is Ayanda Malele and I'm here to discuss our favorite topic. Well, mine, maybe yours, maybe. I want to discuss underwriting, but in detail. So I've always said, in previous videos that it's obviously not possible that as much as we are the same and we live in the same thingy and we've got the same car, the premiums are going to be different. Obviously they're going to be different. So I'm doing a series of videos to just explain some of the underwriting questions that get asked. And you think, why are they asking me for my blood type? Like, who cares? Okay, well, blood type, not really. But in terms of short-term insurance, there's a series of questions that they will ask you to basically work out the premium, which is the concept and process of underwriting. So the first part of this is going to be a series, but the first part or point I want to discuss is that of the policyholder. So when underwriting begins, we first want to find out who is taking up this policy. And based on your answer, so you say, I'm taking this policy for myself and for my husband. Then they say, okay, so you'll be the policyholder, ma'am. Yes, I will. The process then starts of underwriting. And so usually the first thing that they will ask you for is your ID number. Then they will read you a script to say, please note that all calls are recorded, information you provide, is confidential and blah, blah, blah. Then they say, information you also give to us, we can be able to share with other financial institutions. Do you allow for us to do this? When you say you allow them to do this, that means great. They click enter, whatever button they press, and then it clicks and sends it through to ITC, which checks your credit rating and your credit score. Credit rating, credit score is basically either red or yellow or green. Red is, you've defaulted most payments. You're not a very good payer according to ITC. Whereas yellow, you've had some troubles, but you're trying. And then with green is you're great. You pay every month and you're just a wonderful client. So that information already tells the insurer from the onset that, okay, this person is likely to pay their premiums on time, or this person is likely not to pay their premiums on time, red or green type thing. So that's when already the premium shifts for me and for you. As much as we are the same age, we work at the same company or whatever, our ITC scores are not the same. That's just a general fact. So that's usually the first question that they ask in order to be able to ascertain. The next question that will follow is usually, do you have any liquidations, sequestrations, civil judgments, and defaults? So that is also to ascertain how you work or control or use your money. And if you say, no, I've got none of those, then the policy can proceed. Usually if there's no sequestrations or civil judgments, etc., some insurers will just off the bat say, no thank you, we're not going to accept the risk. Some insurers can be able to look at your case and take it to the actuarial department, and actuaries look at it and say, okay, cool, based on these, we can still be able to cover this person. The next question they'll ask you, now as much as it links to the policyholder, they actually want to group everybody to say, is anyone that will be covered under this policy, have they had a civil judgment, sequestrated, have defaults and so forth? So that is to then get, as much as you're the policyholder, but anyone else, because I can then say my dad must open the policy for me, but I've also squandered, or I've also not had a very good credit rating or credit score, or done things with my finances. So in that instance, it covers everyone that will be covered under the policy to say, have they had any of these things? And over and above the defaults and sequestrations and so forth, it also ties to, have they been previously cancelled by an insurer? So again, I can try to say, let me get my friend to start the policy on my behalf for my car because they've never had a cancellation, but I have. So now I think I can just slide myself into the policy. I can't, because from the beginning, anyone that will be covered in the policy needs to disclose, or you as a policyholder must disclose this information about them. So generally they will ask you that. Insurers work differently, but that's the general questions that they will ask you to ascertain cover or not, linking to particularly policyholder, but as well as who will be covered under the policy. So with that information given and based on the answer as the policyholder, whether a person in the policy was sequestrated previously or they had a civil judgment, or maybe they were previously cancelled by an insurer, that insurance company, depending, some have the appetite for the risk and they'll be able to still send it to the actual department and see if they can be able to take on the risk. And some insurers will flat out refuse from the onset. Basically, when it comes to cancellation due to, fraud or dishonesty, most insurers, I think all, will probably say no to that, because dishonesty is a big thing. But it also depends. Maybe it was 5 years ago. There's a lot of factors that go into this, but other insurers have got the appetite for it, and some just say flat out no. And it's nothing to do with you. It's just that, the appetite is different based on insurer to insurer. But that's the reason why these questions get asked at the beginning, to get the overview picture, to get the global perspective of the policy before then going into individual risks, which I will in the next series of videos. But thank you for watching this video. I hope you do like and subscribe, and just tell your cousins, your friends, your dog, make your 6-year-old subscribe, make them watch this channel, and I will see you in the next video. Thank you so much for watching.